Hand over your debit card, sir. What? How did this happen? Your debit card gives a criminal direct access to your retirement funds. Not access to a credit line, not a pending transaction, the actual cash sitting in the account where your Social Security payment arrives every single month. And the people who discover this the hard way almost always held the same belief beforehand. My bank has fraud protection. I am fully covered. Your bank does have fraud protection. What most people fail to understand is that fraud protection does not stop the money from departing first. The money exits the account, and then the investigation begins. And while that investigation is underway, your mortgage payment, your utility bill, your insurance premium, and your prescription costs do not pause for anyone. Today, I am going to explain why debit card fraud strikes retirees more severely than nearly any other group, the federal regulation most people have never encountered, and the straightforward account arrangement that can prevent a stolen card number from ever reaching your retirement income the instant it occurs. Before I go any further, I want to address the 3 reasons most people watching this will conclude that this video simply does not apply to their situation, because all 3 of those reasons are incorrect, and all 3 will cost you money if I allow them to go unchallenged. The first assumption is that you monitor your balance regularly and would therefore catch fraud quickly. What you will actually catch is the aftermath. The money departs your account the moment the transaction is posted. A skimming device installed at a gas station you visited 3 weeks ago can generate a $2,400 withdrawal at 3 in the morning on the exact same day your mortgage payment is scheduled to process. You will discover it at 9 in the morning when your phone begins ringing because the payment was returned. The second assumption is that your bank carries fraud protection, and therefore you are fully covered. Your bank does have fraud protection. What your bank does not have is a rule requiring the money to be returned immediately while the investigation proceeds. The investigation occurs first. Your account remains emptied throughout the entire process. That investigation can legally take 10 business days under federal law and up to 45 days when the transaction involves international activity. Your bills do not wait 10 business days for anyone. The third assumption is that this affects people who shop heavily online, and you use your card in person at establishments you trust. According to FICO's 2025 data, more than 243,000 debit cards were compromised through skimming in that year alone, representing a 5% increase over the prior year. And skimming is by definition a physical attack. Gas stations, ATMs, and restaurants where a server carries your card out of your direct line of sight for 45 seconds to process it at the terminal. The transaction appears completely legitimate. You signed for it, and your card number was already duplicated before you finished your meal. Later in this video, I am going to walk you through the simple 2-account arrangement that financial professionals use privately to ensure a skimming device can never reach the account where their income resides, and why this shields you not only from a gradual drain, but from the type of instant middle-of-the-night withdrawal that can empty an account entirely before you ever open your eyes. It requires 1 phone call to establish. I want you to hold that in mind as we work through everything that follows, because every problem I am about to describe has a clear and actionable solution, and the solution is the same every single time. Now here is the reason none of this ever comes up in a conversation at your bank. Every time you swipe your debit card, your bank collects a fee from the merchant on the other side of that transaction. The more frequently you swipe, the more revenue the bank generates. That means the branch manager who has maintained a friendly relationship with you for 15 years has no financial motivation to sit down with you and say, "Here is the payment method in your wallet that carries the weakest legal protection and the greatest risk of instantly draining the checking account where your income lives." That conversation reduces bank revenue, so it simply never takes place. That is not a conspiracy theory. That is how financial incentives operate. And here is what compounds the problem further. In 2026, Congress voted to eliminate the rules that would have capped overdraft fees at $5. Americans paid over $12 billion in overdraft and returned payment fees in 2025. The banks collecting those fees are the exact same institutions that profit each time you swipe your debit card at a register. Here is the distinction between your debit card and your credit card that your bank will never document in writing for you. With a debit card, the money exits your account the instant the fraud takes place, immediately and without delay. If you identify it quickly and report within 2 days, your maximum personal loss under federal law is $50. Wait longer than 60 days, and you could lose every dollar the criminal withdrew. The bank carries no legal obligation to return a single dollar beyond what federal statute requires. And during the investigation, which can run 10 business days or considerably longer, your account remains exactly as depleted as the criminal left it the moment they executed the transaction. With a credit card, the fraudulent charge never actually leaves your account in the first place. It sits as a disputed item under review. You owe absolutely nothing on it while the investigation proceeds. Every major card issuer in the country will reverse it immediately upon your report. You never lose access to a single dollar in your bank account. 2 cards, 1 wallet. One of them pulls real money directly from your account the instant fraud occurs before any investigation takes place. The other one does not. That is the complete and entire difference, and it is the distinction your bank is not taking the time to explain. Here is the scenario that unfolds thousands of times every single month across this country. A 67-year-old retiree receives her Social Security deposit on the 3rd of the month. The deposit amount is $2,711. She uses her debit card for groceries, fuel, and a handful of recurring online subscriptions. On the evening of the 4th, a criminal uses her card number, obtained from a skimming device at a gas station she visited 2 weeks earlier, to execute 4 separate purchases totaling $1,620 at retail locations in another state. The entire process takes minutes. She wakes up on the 5th and her account balance reads $451. She contacts the bank immediately and formally reports the fraud. The bank opens a formal investigation. Under applicable federal law, the bank has 10 business days to provisionally restore her funds. Some institutions act immediately. Many do not. They are legally permitted under the law to delay until the investigation concludes before returning anything to the account. In the meantime, her automatic mortgage payment of $890 processes on the 10th, declined. Her utility payment of $140 processes on the 12th, declined. Her supplemental insurance premium of $210 processes on the 15th, declined. Each declined payment generates either an overdraft fee or a returned item fee. At the major banking institutions most seniors use, that fee still runs between $34 and $35 per transaction. And each creditor may assess its own returned payment fee in addition to whatever the bank charged. By the time the fraud investigation concludes and her funds are finally restored, she has accumulated over $100 in bank-generated fees, $75 in creditor-assessed fees, a returned payment notation in her insurance file, and 12 days of individually contacting every creditor to explain a situation that was entirely outside her control and that nobody ever warned her was a realistic possibility. The fraud itself was not the most devastating part of the experience. The cascading infrastructure collapse that surrounded the fraud was the most devastating part, and every element of that collapse originated with one card attached directly to the account where her income resides, and one criminal who in a matter of seconds drained it completely. This is the point where some viewers are thinking this scenario still does not reflect their situation, because they maintain reserves, a couple of $1,000s set aside as a buffer. If that describes you, I want you to stay with me for the next several minutes, because the strategy I am about to describe is not designed exclusively for people operating close to the financial edge. It is designed for anyone who does not want a criminal operating in another state to determine the timing of their personal financial disruption with a single swipe, and the entire setup takes one phone call to complete. The strategy is called account separation, and it is the approach that people working inside the financial industry have quietly employed for their own finances for decades, while simultaneously handing debit cards to everyone else. Here is precisely how it functions. You maintain one account as your primary account. This is the account where all of your income arrives. Your Social Security deposit, your pension payment, your investment distributions, everything flows into this single account. You do not provide this account number to merchants. You do not swipe a debit card connected to this account at gas stations, grocery stores, restaurants, or anywhere a payment terminal could potentially be compromised. This account is where your money lives, and it is exposed to the outside world as infrequently as possible. Then you establish a second account, a designated spending account with its own separate debit card, and a deliberately limited balance that you replenish periodically by transferring funds from your primary account. You place $300 into it at the beginning of the week. You use that card for routine, everyday purchases. If a skimming device captures that card number, the criminal gains immediate access to whatever balance remains in the spending account, $300 or less, not $2,711. Not your full monthly income, not the account through which all of your automatic payments are processed. Even better than a spending account debit card is replacing that card entirely with a credit card, not to carry a revolving balance, not to pay interest charges. You use the credit card for every single purchase you make. You pay the full statement balance each month by the due date. Every transaction on that card is protected by the Fair Credit Billing Act at the federal level. Zero liability, immediate reversal when fraud is reported. And your checking account, the one your mortgage and utilities and insurance premiums run through every month, never comes into contact with a merchant terminal under any circumstances. If you prefer not to use a credit card because you do not want the temptation that comes with an available credit line, the two-account debit strategy accomplishes the same protective objective equally well. The underlying principle is identical in both cases. Establish a clear wall between the account where your income lives and the account that interacts with the outside world of merchants and terminals. A criminal who skims your spending card walks away with $300 and an inconvenience. A criminal who skims your primary account walks away with your rent payment, your electric bill, and your medication budget instantly in a single overnight transaction while you are asleep. I want to address one additional point directly before we continue. Some of you are thinking your bank already provides a zero liability policy on your debit card, and you are protected regardless of what happens. Here is what that policy actually represents in practical terms. Your bank's zero liability debit card policy is a voluntary internal commitment established by the bank itself. It is not a federal law enacted by Congress. The Fair Credit Billing Act protection that applies to a credit card is federal law passed by Congress and signed into statute. Your bank cannot alter a federal law during a quarterly earnings call. Your bank can modify its own internal voluntary policy at any time it chooses without any advance notice to you. Banks have previously restricted, narrowed, and attached new conditions to their voluntary zero liability policies, and they will do so again when fraud losses rise to a level that justifies the adjustment. The account holders who depend on a voluntary bank policy instead of a federal statute are precisely one internal policy memorandum away from an entirely different conversation at their local branch. There are 4 specific circumstances where a debit card remains the appropriate payment instrument. I want to be precise about each of them, because the objective here is not to discard your debit card permanently. The objective is to deploy it only where it makes genuine sense and in no other situation. ATM cash withdrawals at your own bank's machine represent the first appropriate use. You are withdrawing your own cash from your own institution, not presenting your card number to a merchant payment system. Shield the keypad with your body when entering your PIN. Before inserting your card, take 2 seconds to examine whether the card reader slot appears loose or visually different from what you typically observe. A legitimate ATM card reader is firmly and solidly attached to the machine. If anything shifts or moves when you make physical contact with it, step away and use a different machine or walk inside the branch to complete your transaction. The skimming risk at an ATM is genuine, but remains entirely manageable with 2 seconds of deliberate attention. Small local businesses that do not accept credit cards represent a reasonable second exception. Pay only the specific amount required for that transaction. Use your designated spending account card rather than any card connected to your primary income account. Government agency payments and utility bills where the agency assesses a credit card convenience fee of 2.5% to 3% make practical financial sense on a debit card. On a $200 utility bill, a 3% credit card processing fee costs you $6. If that identical payment processes at no cost on a debit card, the debit card is the rational choice for that specific payment. Use the spending account card rather than the card connected to your primary income account. And any merchant or business that offers a cash or debit price discount falls under the same rule without exception. Spending account card only, never the primary account card. Here is your personal security checklist for every debit card you maintain as an active instrument. Real-time transaction alerts configured for every single transaction without exception. Not a daily digest summary delivered at the end of the day. One individual text message the precise moment your card is used anywhere for any amount whatsoever. The second a transaction surfaces that you did not initiate, you are aware of it immediately rather than days later when the damage has compounded. Call your bank today and confirm this feature is currently active on your account. If it is not yet enabled, ask the representative to activate it before you end the call. A reduced daily spending limit set below your bank's default threshold. Most major banks automatically assign debit card spending limits of $500 to $1,000 per day without discussing this with you. Call and request that your limit be reduced to $200 or $300. This does not prevent you from executing larger planned purchases, which can be authorized quickly with a single call to the bank. What it does accomplish is ensuring that a criminal in possession of your card number cannot execute $900 in transactions across multiple states before sunrise. Never save your debit card number within an online retail account profile. If that retailer's database is ever compromised in a breach and your card number is stored there, your checking account is the breach. Enter the card number manually with each transaction, or inquire with your bank about virtual card number options if that feature is available on your account. Review your account activity every 3 to 4 days without exception, never on a monthly basis alone. The 60-day window established by the Electronic Fund Transfer Act is not a generous or comfortable timeline. Discovering fraudulent activity in Week 7 already places you within the range where your personal legal liability expands substantially. 3 minutes every few days is all that is required. Open the mobile app, scan the most recent 10 transactions. Anything you do not immediately recognize, call your bank without delay. And one final rule that applies without exception every single time you stop to purchase fuel. Never swipe a debit card at a gas station pump under any circumstances. Walk inside the station and pay at the interior register, or use a credit card at the exterior pump. Gas station pump skimming accounts for a disproportionate share of all debit card fraud cases reported annually to the Federal Trade Commission. The exterior pumps sit completely unattended for extended periods throughout the day and night. Modern skimming hardware has been miniaturized to the point where it can be installed inside the pump housing in a location where no external visual inspection from outside the pump will ever detect its presence. Using a credit card at a gas pump costs you nothing additional and permanently eliminates the single highest risk swipe location encountered in ordinary daily life from ever threatening your checking account balance. Now allow me to walk you through exactly how the phone call to establish this arrangement actually proceeds, because I recognize that for some viewers, the prospect of calling the bank and requesting account changes feels uncertain and perhaps slightly intimidating. and I want to remove that uncertainty entirely before you close this video. Dial the main customer service number printed on the back of your existing debit card, or visit your local branch in person if you prefer conducting this conversation face-to-face. Inform them that you would like to open a second checking account linked to your existing primary account and issued with its own separate debit card. Most banking institutions can complete this arrangement within the same call or the same branch visit, frequently in under 15 minutes from start to finish. Ask them to configure automatic transfers on a weekly or bi-weekly schedule from your primary account into this new spending account in whatever dollar amount reflects your normal weekly spending pattern. $200, $300, whatever amount reasonably covers your groceries, fuel, and incidental everyday purchases. Once that spending account is open and funded, the next step is verifying and updating the payment connections for all of your automatic bills. Your mortgage servicer, your utility providers, your insurance company, your Medicare supplement premium processor, and any other organization that pulls payments automatically from your account. Every one of those payment relationships should be connected exclusively to your primary account, the account that never interacts with a merchant terminal. Your new spending account card is the only card that travels in your wallet for routine daily purchasing activity going forward. Then, while you are still on the phone or still seated at the branch, make 3 additional requests within that same conversation. Ask them to activate real-time transaction alerts on both accounts simultaneously. Ask them to reduce the daily debit spending limit on the new spending account card to $200 or $300, and ask them to provide written confirmation, either by email or printed branch summary, of exactly what your liability exposure is for unauthorized transactions on each of the 2 accounts, so that documentation exists in your personal records in the event you ever need to reference it. That is the complete setup from beginning to end. 1 phone call, 15 minutes of your time, and from that point forward, the account where your Social Security payment deposits every month is permanently and structurally separated from every gas pump exterior terminal, every restaurant payment system, and every online merchant in the country. Here is the complete summary of everything we have covered. Your debit card is governed by a fundamentally different and considerably weaker body of federal law than your credit card. During an active fraud investigation, your money can remain inaccessible for up to 10 full business days, while your automatic payments continue processing and fees accumulate on top of each other. Your bank's voluntary zero liability debit card policy is not a federal law and can be modified or eliminated at any time without prior notice to you. The account separation strategy requires 1 phone call to implement and permanently removes your primary income account from the reach of any merchant payment terminal and from the type of instantaneous overnight drain that can eliminate an entire account balance in a matter of seconds. And there are exactly 4 circumstances where a debit card remains the appropriate and sensible instrument: ATM withdrawals at your own bank's machine, businesses that do not accept credit cards, government agency payments that assess a credit card convenience fee, and merchant situations that offer a cash or debit discount. Deploy it in those 4 specific situations. Replace it with a credit card or a limited balance spending account for every other purchasing situation in your life. Share this video with 1 person you know who is currently running their Social Security deposit and their daily routine purchases through the identical debit card. That single share could protect them from losing $2,711 next month and spending 10 days on the telephone with creditors, while their bank completes an investigation they never anticipated and never saw coming. That is exactly what this channel exists to help prevent. So I will see you in the next one.